Hello everybody and welcome back to our Trading Club analysis, this very special 8-part series that we're providing you with access to. In this video we'll be focusing on our analysis of crude oil using the checklist process that you'll now be becoming more familiar with, having seen the examples applied to other markets, which is based on our 30 plus years of combined experience basically in trading and investments. So let's begin by just recapping on as we do each time, on why we do this and why we go through all of the process and try and find a score, how this actually helps us in the markets. Now, we've seen this example earlier in the series, strong positive reading, and you can see the impact that this had on the market. Similarly, when things appeared very negative on the checklist, this is the most negative score that we've seen recently, you can see that this also identified a major turning point in the cycle for crude. And that's exactly why I want to go through each of the items on our checklist with you in greater detail now that you hopefully can see the importance and the significance of them when it comes to the reality of placing a trade and trying to make money, which is what of course it's all about, whilst keeping your risk in check, which hopefully you can do with these checklists. So we'll begin with the first of the 5 items on the checklist here, economic activity. So what we like to look at for this is the JP Morgan published Global Manufacturing PMI. The PMI, the Purchasing Managers Index, you can find the definitions for online, but basically it is a leading indicator of economic activity. So it's a survey of purchasing managers at large corporations, and they're asked to basically provide the feedback on their outlook, on anticipated orders and so on, and basically purchasing activity that they're responsible for. So they have a very good overview of business activity in their position, and therefore that's also correlated quite closely with the direction of the economy and the health of it. So if business is expanding and the economy is growing, then the demand for crude oil is also likely to be increasing. The opposite holds true if manufacturing activity, as indicated through the PMI, is falling. We're likely to see less demand for crude oil, which is used in pretty much everything in our economy. So in this case, we can see that the PMI is above 50, which is the neutral reading. There's more information about this in our $1 Million Traders course and in the video definitions that we provide in our Trading Club membership. But it's above 50. And it's also rising. You can see it's increased at the time of producing this in September. The August reading, which just came out, is higher than July. So things are improving whilst being at an already positive level. So this is really positive for crude oil. And we give that a +1 naturally on our checklist. So moving on to the second item here, inventories. We define each of these in very specific technical detail, which you can refer to at any time. But basically here, what's our application as traders? Okay, when this is falling, when it's below 0, there's a draw on inventories. So if you can imagine when it's above 0, inventories are building. If there's a draw on inventories as it's below 0, that's positive for crude oil because there's demand is outstripping basically the remaining supply in inventories. So this, in this case, with it being below 0, is also positive for crude oil price. Next up, we want to have a look at the actual underlying production. Well, first of all, we look at the US picture, which, as you can see, there were large production cuts as the oil price fell, and it has begun to rebound as the oil price has stabilized naturally in response to that. However, we like to look at not just the trend, but we also like to focus on the more recent change as traders, particularly shorter term. And what we can see here is that supply has actually come in, so it's reduced over the past month, and that would be considered positive. Less supply, similar, we'll assume demand the same, unchanged. Less supply suggests a higher price. So we also like to look at some of the other countries within OPEC, and in this case we'll look at the Saudis. And you can see they've also been cutting recently. They cut dramatically, began to rebound, not to the same extent as the US, and it's remained sort of contained down here. So whilst it is declining, so whilst there's less production, slightly less than last month, production has been rising for a few months. So the trend is upward. However, there's now a little pullback in that, so we consider this to be a slight positive overall. Moving on to the next one, we're going to look at the positioning of speculators, as Lex and I like to do as contrarians. And what we can see here, first of all, is in blue, the top panel is the spot price for crude oil futures, and below that you have the so-called non-commercial net position, net futures position in green and grey. And what you can see here is that whilst it has ebbed and flowed in 2017, it basically, as of the beginning of the first quarter of 2017, it was actually at a record net long extreme. And that, when price was failing to break new highs, was an indication, an early indication that, you know, it was going to struggle to break above sort of the $53, $55 range from memory. And we did see some weakness as the subsequent months played out. However, what do we see here? In the past month, so we're still at an elevated level, which is bearish from a contrarian perspective, and we've also seen it tick up in the last month quite significantly. So on our checklist, that's a negative. There fewer buyers remain. People who wanted to buy the bulls have already bought. There may be a few more bulls out there who are yet to commit, but they'll be most likely late to the party, and it could be a great opportunity for bears to step in, or short sellers to step in and take control. In the short term, at least. But finally, we need to consider the US dollar. Now, we can use the US dollar checklist where or the score from the US dollar checklist where the work has already been done for you, as we presented in a previous video. So by looking at the latest US dollar checklist, which was positive, plus 1.5, we can say that given the inverse relationship, if we're positive, the checklist is positive on the dollar, it should be negative, a negative factor for crude oil. And that's precisely what we have put on our checklist here. So that actually lowers the overall score, which was beginning to look fairly bullish for crude oil. But because the US dollar is such an important factor to consider and driver of commodity prices, it's included here, and it gets an equal weighting. It does drag down the overall score. So in total, we have 2 +1s and 2 -1s. So that nets out, and we just have the positive half remaining. We've seen the production picture improve slightly. The US dollar strength, in an absolute sense, turn as a negative for crude oil. Apologies if that's getting a little bit confusing now. But overall, we have a reading of positive half a mark, so not a particularly strong score by any means, but that is an improvement. It shows signs of improvement over the previous month, which of course you guys wouldn't necessarily have been around for, but our members received. So when we look at this, as I've mentioned with the other videos, we generally prepare the checklist report a month in advance. We generally prepare it in the final week of the preceding month. So in this case, we were preparing it the final week of September. So by the time we published it, we had a small positive here, which you've just seen. And that was at a time where crude was actually testing the previous swing high, and it was attempting to break out. So given that this wasn't a particularly strong positive score, it didn't suggest following or buying the breakout. Instead, it suggested allowing the market to come to you, which, you know, the really successful traders will all hold as a mantra of theirs. You let the market come to you with discipline, with patience. Let the market come to you. So when you don't have an overwhelmingly strong score, this is where you want to be a bit more tactical and more selective in your trading. So we go into the month of October maintaining a long bias, but we didn't buy the breakout. We also saw a little DeMark exhaustion signal there, the tiny number 9. Which is something for another day, but we go through in our trading club. However, what we see here is that as price kind of, if you like, diverged from our fundamental checklist reading, this was, a buying opportunity presented itself. So as we retraced one of the Fibonacci levels around 49.90, that's why I began to look with interest. You can see we closed on it, and that's why I actually personally got long. There's a little bit of a drawdown. I had a stop just below, or would have stopped myself out on a close below the 50-day moving average in blue. So I did, following the initial rally, I did get caught offside for a day or two. But as I produced the video update for our members in real time, as I saw this happening a couple of weeks after producing the monthly checklist report, those of you, or those of our members who followed this, would have bought at around $49.50, and we're now currently $52. So that was a really nice move with very little risk when you're trading in the direction of, or when you have a bias, a fundamental bias. You maintain discipline, you let the market, you don't chase it when it's weak, you let the market come to you, and that's when you make the big cash, when the price is basically wrong. You're trading with the odds in your favor, and everybody else who was, so all of the sellers who were putting pressure on crude there were going against the what our process was telling us. So this is where our edge was. So even when it's not a blockbuster or a show-stoppingly strong score, it still provides you with a bias, and you can still have these tactical opportunities and take them with greater confidence and with a far higher probability of success than you would do trading blindly or trading impulsively based on technical levels alone. So with that, I conclude my analysis and introduction to how we apply the checklist to crude oil. As we do in our trading club on a monthly basis, with the interim videos as well from me whenever we see those opportunities appear in line with the checklist report available each month. So if you have any further questions, you know what to do by now. Reach out to me at info@lexvandam.com, address for my attention. It'll definitely get to me and I'll get back to you. Or visit our website, lexvandam.com, head to the Trading Club page if you'd like to get started straight away and see what we're putting into practice in real time. Hope to see you there. Thank you very much for watching. See you again soon.